Well, hello and welcome. This is Robert Schein with Blanke Schein Wealth Management, Managing Director and Partner. Today we've got a special guest. I'm really excited for this opportunity from the investment committee here at Blanke Schein Wealth Management to interview Strider Elass. Strider is a senior economist with First Trust. First Trust, as you know, they're not only a must-read for us, but a must-read for everybody, from Brian Westbury and everyone on the team there. They're just first class, and that's just not me and Blanke Schein Wealth Management saying that. That is actually Bloomberg and a few other outlets in the media world and the economic world have awarded these guys consistently top performers. In fact, number 2 last year, and in the last 3 to 5 years, they're within the top 5 to 10% of all economists out there. So, without further ado, Strider, thank you for joining us today. Where are you calling in from?
Hey, Robert, thanks. Great to be with you. I'm calling in from sunny San Diego here, so probably similar weather to what, similar weather to what you probably have right now too. So not a bad day today.
You know, we are blessed right now because, as I said, especially in the Coachella Valley here in Palm Desert, Indian Wells, people spend a lot of money to come out to where we are right now for this weather. So, although we're all at home and quarantined, if you will, as I tell the kids, we're in the backyard, so, it's not the middle of the summer, so we're okay.
Yeah, it makes a big difference to have nice weather. That's for sure when you got to be stuck at home.
It's true. So let's get right into it. I thought we'd just start today with, your thoughts from, First Trust, what you're thinking, what you guys are seeing from the economy, the markets, and then I'll follow up with some questions that I know my clients are be interested in asking.
Sure. Yeah. There's obviously a lot that's going on right now, and I think really for me, it's always important to back up and kind of figure out a good foundation. And I think really there's 2 ways that you can currently look at the world. You can either look at it through a magnifying glass, or you can look at it through a spyglass. And you think about that magnifying glass. By nature, it takes something that's really, really small and it blows it up really, really big. It's something that you're focused on in a specific point. And I think that's where we are today. We live in this magnifying glass world right now where we're so focused on the coronavirus, and for good reason. It's a virus that spread tremendously and it's killed a lot of people tragically. And so I truly believe, though, that this has been the world's first ever social media induced panic. And the reason I say that is because when you take a look at just statistics here, it's pretty wild to think about. Right now, if you Google news search coronavirus, it's going to bring up multiple billion news articles about the coronavirus. If you search for any other disease, any other epidemic, pandemic, or virus that's current, or anything that's killing people today, the news results might be in the millions, but not in the billions. And so everything's about the coronavirus. I mean, you think about tuberculosis, for instance. Tuberculosis, I mean, I can't even really remember the last time I said that word, let alone thought about that it killed 3,000 people on average every single day. And so there's a lot of diseases out there right now that are taking lives, and it's sad. And the reality is that we live in an imperfect world where people tragically are dying every day from all sorts of diseases and accidents and whatnot. In fact, just in the United States alone, about 50,000 people die every single week from different causes. And so I think it's really important to try and put some of this coronavirus into perspective, because we do have a lot of people that are very concerned, and they have been concerned over this entire period. And it is something to be concerned about, but is it to be concerned about as much as it's been made out to be? And that, I think, it isn't. And I'll try and explain why. But one of my favorite quotes I always come back to, especially in times like this, is nobody knows exactly who wrote it, but it's, if you don't read the newspaper, you are uninformed. If you do read the newspaper, you are misinformed. And I think that's very true. And we all are sitting at our houses right now and watching news, looking at social media hour after hour. In fact, you think about that death counter that they have for coronavirus on several websites that's updated almost minute by minute, and you see these numbers slowly creep higher. And so it feels like things are just never going to get better, and that people right and left are dying. But that, again, I think is very important to put into perspective. And so one of the ways I kind of think about this to put it into perspective a little bit, and if you've had the coronavirus, if you know somebody or loved one that has it or has died from it, I am very sorry for you. What a terrible thing to have to deal with, to have to live with. I mean, it is a tragic time for many people that have experienced. One of my friends, his dad passed away from it. I mean, it's a tragedy, and I don't want to make light of the situation whatsoever. But I do want to come at it from more of an analytical point of view, because I think it is very important here to kind of put some of the numbers into context here. And one of the ways I like to do it is by comparing it to the flu, not because it's equivalent to the flu or better or worse than the flu in terms of how severe it is, but we have similar numbers. And so they're both viruses and both in the United States. So I think you can kind of put it into perspective a little bit. And right now, as of yesterday, when I updated these numbers, so they've changed a little bit, there's about 2.8 million people in the United States that have been tested for COVID-19 so far. Of those 2.8 million people, there's been about 550,000 of them that have tested positive. And we've had so far, as of yesterday, 22,000 deaths, a significant amount of deaths from this. And so what people really worry about is that case fatality rate. They want to look at the number of deaths divided by the number of people who have tested positive for the coronavirus. And so that case fatality rate, the CFR is what they call it for short. You probably heard that term. Currently in the United States is around 4%. So what's that essentially saying is 4% of those that test positive have died from the coronavirus. And that's a pretty high number, because what happens is that number gets extrapolated out, and they say basically, okay, if this is how many people are dying relative to testing positive, then we could have, 1 million, 2 million people in the United States, if a certain amount of the population gets this, die from this, which would be tragic. And yes, it would be very tragic if that happened. But the whole point of this is that we just do not currently have enough information to make decisions like this, or to even make prognostications like this through models. A model is only as good as the data that you have to put into it. And the data that we have right now is very limited. And so that's why I want to compare this to the flu, to give you some almost apples to apples comparisons here. When you look at the flu, so far this flu season, 1.3 million people have been tested for the flu. Of those 1.3 million people, 250,000 of them have tested positive. And so far, the CDC estimates on the low side that 24,000 people this season have died from the flu. So if you look at 24,000 divided by 250,000, the amount tested positive, that gives you a case fatality rate of around 10%. Now, we all know that 1 in 10 people that get the flu are not dying.
Right.
So is that an accurate number? Well, no, it's not. I mean, it's accurate in terms of saying this many people have been tested and this many people have tested positive for it, but 250,000 people of those that have been tested, which has only been 1.3 million, tested positive. But the CDC estimates so far this flu season that 39 million people have had the flu. And so if you look at the total number of people that have been infected, 39 million, and you look at those that have died, 24,000 divided by 39 million, that gives you a fatality rate of 0.06%, less than 0.1%, where if you compare it to the way that it's being used for the COVID-19 right now, it says it's 10%. And so all this to say, I'm not trying to say that COVID-19 is more or less going to kill more or less people than the flu. It probably will kill, looks like it probably will kill more. Is it more or less dangerous? That's not what I'm trying to say. What I'm trying to say is that we don't really know because we don't have enough data. We don't know the actual denominator, how many people that have been infected. And I think until we do significant antibody testing around the United States to find out how many people have had this, we won't really know. And so that's what really needs to ramp up here. in the next couple months. But a good example of just how I think how fear has gripped us in our homes from what we're hearing on the media or what we've been focusing on is I think a lot of people believe if they do come down with the coronavirus, that there's a very high chance of them dying from it or really even getting the coronavirus. And if what I want to be very clear about here is if you're over 65 and you have a autoimmunity disorder or if you have a weak immune system and you get the coronavirus, you're going to be in a world of hurt. I mean, the numbers are pretty clear. There's a chance that you could die from it. I mean, people over 65 that have immune issues are really struggling. No doubt about that. But that's really the segment of the population, the really only segment of the population that's really struggling from this whole thing. Younger people in general, anybody under 65, it's very rare for you to actually die from this if you actually get it.
Yeah, to the point, Strider, sorry to interrupt, but to that point, in my morning research this morning, if you take the tri-state area and the highest concentration, New York, New Jersey, and Massachusetts, you put them together right now, the research that I have says that 97% of those fatalities, now keep in mind, they have over 50% of the fatalities across the entire United States, and of which 97% of the fatalities of those three states have not only tested positive with the virus, but also had a pre-existing condition, as you just pointed out, as it relates to that. So plus 65 autoimmune or some other pre-existing medical condition. So it's quite clear that, the shelter in place or stay at home is very important in wearing the mask and all that other medical stuff that we've grown to learn over the last 3-4 weeks of our lives. That being said, I love your analogy of the microscope, right, or the glass, looking at just one specific myopic point of view and not looking at the broader picture. If we could, shifting gears, because it does look like from the apex standpoint or the wave or everything that we've done, by staying where we are and letting the medical community do what they do, and God bless them for everything that they're doing. And we've got a long road to hoe as it relates to that. It doesn't mean that we're out of this, but it does mean that, all the models that have been predicting across we could look to Spain, Italy, and a few others, even China itself, as I've been communicating to my clients from time again, we can't trust China and their information, but what we can do is look at, Mr. Johnson, who's running Starbucks, and he's reopened, 95% of all of his Starbucks in the epicenter of where it happened. So, a U.S. CEO would not put his workforce in harm if he didn't believe that, the worst is behind us and that there is the other side of the curve. And I've been communicating this to our clients, as well as the math, right? The numerator and the denominator. And the challenge that we've been seeing is that the U.S. News cycle has just been so vicious in the sense of the headlines. I mean, they went from infected cases and overnight they shifted to death rate, because that's the count that was rising, but the infected cases was the first thing to, sort of roll over as it relates to so all of this information. And realistically, the more we test, we're going to find out that, to your existing point, that the fatality rate is going to go down, not up. You increase the denominator, and death rate is obviously going to go up, but it's not going to go up as rapidly as when we test and test and test. We're going to get a huge exponential increase in the denominator. Therefore, by math, statistically speaking, you're going to get a lower death rate. So when it's all said and done, unfortunately, this thing has been it's a tragic case, and I think it's better to overdo it than not, as it relates to health, pandemics like this. And God knows if we didn't do what we did. But shifting gears right now, what does it look like economically speaking to the economy? I mean, I've been also telling my clients that I've been a huge fan of Steve Mnuchin and the Treasury Secretary here, and what the Federal Reserve has done, as well as working fiscal and monetary policy, as well as what the presidents have done, has just been tremendous. I mean, you want to speak to something like that, what you guys have seen?
Sure. Yeah, just one last point to kind of put some of this into context with what you're saying. An interesting paper came out from Stanford yesterday, I believe it was, that I read through. And they had a a chart in there, a table in there that actually kind of went through road deaths per billion miles, and they're able to calculate basically the probability of you dying in any of these hot spots around the world right now where most of the cases are. What would be the likelihood in comparison to driving, you dying from the coronavirus currently in these hot spots? And so all this information is for people that are under the age of 65. But if you live in New York City right now and you're under the age of 65 right now, your risk of dying from the coronavirus right now is the equivalent of the risk of you dying from driving 415 miles a day over the past 25 days. So that's basically, if for the last 25 days, if you had to drive from New York City to Baltimore, Maryland and back every single day, the risk that you're taking by taking that trip would be the equivalent of the risk that you have right now of dying from the coronavirus. And I think everybody on this call would be confident that they could make that trip every day and really not be concerned. Probably even wouldn't have crossed their mind. They probably wouldn't look forward to driving 415 miles a day, but death is not something that's on their mind worried about from that trip. And that's the same probability right now. And so the probabilities, if you're under 65, are very, very low of dying from this. And so that does bring me to the economy, because I think really, I would say this has been overdone. The costs so far have far outweighed the benefits to what we've been doing. And the reason I say that is because we do know that majority of people that will get the coronavirus, even though the numbers that we have are just those that are really sick right now that are actually getting testing done. But I think as the numbers come in, what we're going to realize is, wow, a lot more people actually have had the coronavirus, and it was mild, especially those in younger people. And we shut down the entire economy for this. And so obviously I disagree with shutting down the economy, because I do believe the costs will far outweigh the benefits. But I think what's really important here is it doesn't really matter whether you agree or not. This is the situation we're in today. And so what do we see going forward? And I think, well, what we do know is that we're in a recession right now, and it might be the steepest recession that we've really ever seen in history, at least since the Great Depression. But GDP could fall by more than even we saw in the Great Depression in a single quarter. It's not going to be prolonged like the Great Depression was. We're not going to be in a depression. The reason it was called the Great Depression was it was a prolonged period of economic contraction. This is going to be very, very short, very, very quick. And I call this an artificial recession that's been driven by government, obviously shutting down companies. And you look at small business, for example, there's 30 million small businesses in the United States, which employ almost 60 million people. And so that's about half of our labor force. And so if you shut down these small businesses, that obviously has a dramatic impact on not only employees, but all these businesses. And the average, if you look, the median bank right now, or the median small business, has about 27 days of cash on hand. If you're a restaurant, it's only about 16 days. And so, we've blown past those. Companies are really hurting. Obviously, unemployment, when we get April's numbers, it's probably going to be 15, 20, 25%. We're going to go from the lowest unemployment rate we've seen in 50 years to by far the highest unemployment rate we've seen in 50 years within a matter of months. And so my real point I want to get across is that we're going to get a lot of this monthly data that's going to be coming out in the coming months, but that's going to be backward looking, because we're living through the recession right now. By the time we actually get the April data that we're seeing right now, it's not going to be till May or even some into June. And our second quarter, for GDP reading for the second quarter, which we believe might be minus 20% or more, which would be tremendously big, obviously, that's not going to come out until July. And we think we'll be well into a recovery by July. And so I would focus more on weekly indicators right now than I would focus on monthly, because those monthly data indicators are going to be so far in arrears. And so I want to go through just a couple of these quickly to show you just how bad things are right now in the economy, because everything's shut down. And initial unemployment claims for insurance, last week it was 6.6 million people that filed. I mean, when we were in good times just a month ago, it was about 219,000 people that were filing. So we've seen an increase just over the last month by about 3,000%. You look at box office receipts, so movie theater goers, last week they brought in a total of $5,000 for the entire week nationwide. A year ago, that number was $184 million. That's down about 100%. Rail car traffic is off 16% a week this last week from a year ago. Steel production's off 20%. Hotel occupancy is down by 65% from a year ago, from last week to the year ago. TSA checkpoint data, you can look at this on a daily basis, seeing how many people are going through airports. As of April 8th, last time I update this, 94,000 people went through the airport that day. A year ago, it was 2.2 million people, so that's down about 96%. And if you look at gasoline consumption in the United States right now, last week it was 5 million barrels per day on average. A year ago, it was 9.8 million barrels per day on average. So that's down about 50%. I mean, these are sizable numbers that we've never really seen in history, those big of drops. And so all this to say that second quarter, it's going to be bad. And we're already living through it right now. And probably most of us aren't really affected that are on this call in a significant way. But there are a lot of people that have been significantly impacted, and it will take time to get those jobs back. I think about California, for instance, and part of and as you said, I'm not a big fan of stimulus whatsoever, but I do believe if government is going to shut down the entire economy, that they do need to put something in place to backstop a lot of these small businesses and especially a lot of their employees. So I would say in this case, I agree with the stimulus, and I'm amazed at how fast they got it through and got that out. But I think it will have some adverse consequences too. I think it's going to be hard for a lot of workers to want to go back to work anytime soon, because the generous federal benefits from unemployment of $600 extra a week for 4 months does make a big difference. I've been going, and this has been tedious, but I've gone every single state and gone to the unemployment website and calculated based on the way that they use their formula, basically break-even numbers for what a person on employed or unemployed would have to make to basically break even, where they're not losing money by being unemployed. In fact, if it's below this threshold, they're actually making money. And when I look at California, let me see if I can find that sheet here. I have it somewhere. When I look at California here, let me pull this out. So many papers on my desk. So break even for California is $54,750. So if you make $54,749, for instance, and below that, you're actually going to be making more money in the state of California being unemployed than you would be being employed. An example is if you make $30,000 in California right now, your benefits will be equivalent to 150% of what you make at $30,000. So every single day, your daily paycheck will be 50% higher than it was if you're actually working. Wow. And so to me, these numbers, these numbers are pretty astounding, and it's this way nationwide. A way to look at it too is if you look at the median income, not median family income, but median income right now in the United States, it's about $40,000 a year. And I've gone through all 50 states and even Puerto Rico, and the lowest amount, the lowest break even is $41,000, and that's in Puerto Rico. And so basically everybody so median is the actual middle number. So that means there's 80 million people in the United States that make around $40,000 or less that are working. If they're all not working anymore, every single one of them would make more money under unemployment than they would being employed right now. And so my concern is just unemployment's going to take time to come back. And so we do believe the economy will bounce back. First quarter was pretty strong, January and February, and then March is when we started to cut off activity. So we do expect a slight negative quarter for Q1. Q2, we expect contraction of around 20%. Q3 and Q4, we expect the economy to bounce back, growing around 5% each quarter. But all that to say, it's still going to take time to make up for that 20% drop annualized that we see in the second quarter. And so we probably won't hit a new high for output for the economy until late next year. But all this to say is I think it's really important here. Everything that I've talked about so far is from this magnifying glass point of view. And so it does feel, I mean, those weekly indicators, they all look bad, but I think following them is important because those will be the first things that start to show some green shoots of life too when things start to reverse, when the economy starts to open back up. And I think it's really important, instead of just focusing on what's going on currently, this artificially induced recession, to be able to back up and look at the world through a spyglass. And you think about that spyglass, you think about pirates, they've got that big long glass that they look through in order to see what's out there on the horizon. If there's land, it gives them a wide perspective of where they're headed. And I think that's really the view that we need to take today. Because you look at what the economy in January and February, it was booming. In fact, we're seeing acceleration. Employment was growing. The consumer was doing really, really well. Unemployment was super low. I mean, the list goes on and on. Corporate profits were at record highs. Corporate cash on balance sheets is at record highs. I mean, things look very, very good. And that's not what causes a recession. Usually it's an excess. And this time, this is the first recession ever that's been caused by government just saying you can't go to work. And so there's still demand out there. I mean, that demand's going to come back once the economy opens back up here, whether it's in the next couple of weeks or month. But it will take time to come back. But what's important to remember is that what's really been driving this recovery over the last 11 years is the same thing that's going to be continuing to drive it here in the years after this. And this is just a blip in time.
So Strider,
it's really been driving.
Strider, let me interrupt you here just because there's a key point I just want to drive home and clarify that you just made. So I think as we move forward, manage our clients' portfolios and sort of look through the economic data that's not even, like you said, we're in the middle of the recession as we speak. In fact, we're going to look back on this and probably pinpoint it to just that as we see unemployment just continue to spike. But I think the benefits is the key point that the project that you're working on is unbelievable, because it's very important as it relates to, ripping the true story from the headline, which means, 2/3 of our economy is the consumer, right? And one of the things that the stimulus did and the CARES Act was to get checks in hand immediately. And next week, we should see that happen, plus some relief for small businesses to retain their employees. So we keep the unemployment rate down, but then the unemployment benefits have been juiced up. I don't think the media has talked about that too much, but what you said is right. I mean, you could theoretically be making more money. Like yesterday, you were employed in a restaurant. Today, you're unemployed, and you could be making 50% more than your previous salary, if I understand you correctly, in some, or at least most cases, for the unemployment case out there.
Yeah, and that's so it will take time. So we won't be seeing 3.5% unemployment anytime soon again. No. I do expect it to peak here, but
so that being said, don't pay attention to the unemployment number, because even though and that actually speaks well for the U.S. economy, because that actually means that the consumer will have money in hand, and I think that's what the government was asking for, is to be that stopgap or bridge this quarter in time, so that the economy continue to go. So consumer discretionary and a few other things, for the most part, the economy is one thing, the economic data is another thing, and we have to basically take those two separately as we look and navigate roads ahead. So let me ask you, I want to be respectful of your time today, and you've been a wonderful guest for Blanke Schein Wealth Management, as well as you and First Trust have been wonderful partners for us, and I appreciate your time. Is there any other parting words of wisdom or things that we should be looking at and paying attention to as we sort of reopen the economy?
Yeah, I would just say I think really that the spyglass viewpoint is so important right now, and because when you look at when you look at where we were, when you look at the last 11 years, you think about all the new technologies that have come online with the cloud, the smartphone, tablets, 3D printing, hydraulic fracturing, horizontal drilling, which has revolutionized the energy industry worldwide, nanotechnology, biotechnology. I mean, all these things have come online over the last 10, 15 years. And this is, I think, a good point to end on, is you think about the type of companies that are really taking over the world. They're companies that have huge profit margins because there's very little capital intensive. They don't need a lot of storefronts or anything like that. And that's the world we live in today, where companies can go from essentially nothing to multi-billion dollar companies because of the network effect of being able to provide a service or a software that people can download and use, millions of people can use on a daily or hourly basis that just a year ago didn't even exist. And so you look at the future here and you think about, okay, 5G technology, you've probably all heard about it. And what 5G is it's just a lot faster 4G. I mean, almost 1,000 times faster. You'll be able to get stuff, download movies and whatnot. But so that's great for the consumer. But what it really means is that now technology can connect all over the place without hardwired connections or needing wireless routers or anything like that. It's completely done mobily now through 5G. And so that brings into now we can have cars that can drive autonomously because they can process the data needed at a fast enough clip with 5G. You're able to now bring certain software to job sites that have big data capabilities and artificial intelligence. I mean, you think about where we're going over the next 5 years. It's the exact same place we were going in January and February, but we just took this blip here where the market was artificially depressed by about 30% because of this artificial recession that we're going through here. And so we look at this right now as one of the best buying opportunities probably ever in the history of the United States. And we think, I mean, I don't know where the market's going a week from now or 2 weeks from now. I don't know if we're going to hit if we already hit the bottom. We think we did. We've been saying that, but who knows? Maybe there's another drop. But what I'd say here is dollar cost averaging if you have cash. But worst thing I think you can do right now is if you don't have any cash and you are very concerned and you have been, try and hold on through this. I think it'll be over a lot quicker than you believe. In 6 months, 12 months, 18 months, we believe the market will be substantially higher than where it is today. And so I guess that's how I'll kind of end with that. And Robert, it's been great to be with you. If there's any questions that come up, feel free to reach out anytime and happy to take those.
Strider, thank you. Give me 1 second. I want to show you something.
Yep.
I don't know, 5 weeks ago, just a point on what you just brought up. 5 weeks ago, we got signs in California that we might be, working from home and so on and so forth. And, we've been doing Zoom calls with our clients for years in the office, but not so much at home, if you will. So I bought a whole bunch of these, for my team, and I got them here in 2 days from Amazon. And we had everything all set up remotely for our entire team to be able to, do what they need to do for our clients. But it just goes to show you that, necessity is the number one skill, right? Because the power of, a month ago, 2 months ago, everyone, if you didn't have Zoom or telecommunications in your life, or even know how to use technology, now with the last month and a half, I hope we've all been able to learn and adapt. And I think that's what's going to come out from this economy is a lot of things. Maybe we don't go back to doing business the way we traditionally did it before, but I will tell you, we've learned a lot in such a short, compressed period of time. To your point, 10 years ago, even 12 years ago, we didn't have the iPhone, and now we're communicating right now. But, Strider, thank you for your time. We learned a lot and just appreciate everything that all you do and all your team does at First Trust. Again, it's a valued partner here with Blanke Schein Wealth Management. And we look forward to the day very, very soon of us getting together and doing a live update in a one-on-one session with our clients again soon.
I look forward to that too.
All right, my friend. Well, you take care and enjoy, enjoy the rest of the day.
All right. Take care. We'll see you later.
Thanks, bud.